Good morning, traders. Good morning, traders. Today we want to discuss Dow Jones Index, advanced technical analysis, tips and tricks. Dow Jones Index, advanced technical analysis, tips and tricks. I'm on the yearly chart, and there is something bordering the professional traders. There is a key levels if you are trading Dow Jones and you are not trading around key levels. I recommend that you start also paying attention to key levels. So at this junction, looking at the Dow Jones Industrial Average, there is a key level that the professional are watching. That's the level that they are watching is the high of 2015. That high is at 183.51. Now, talking about advanced technical analysis, tips and tricks before you run away, I recommend that you watch the full length for this video so you may understand more about advanced technical analysis, tips and tricks. I will be talking about fractal patterns because there is a specific fractal pattern on a monthly chart. That pattern is formed right here. All right, you see here, can you see with your eyes? So when you are a technical trader, you need to keep your eyes wide open, all right? So there is a fractal pattern that is being formed on the monthly chart. Can you see it? No? Can you see the fractal pattern? Now pay attention here. So because I want you to watch the full, in fact, there are videos that trader must watch in total, which means if you are a serious trader trying to improve your trading, some of these videos this one of them that you need to watch the full length of it, all right? It's pointless to watch part of it and then go away. So if you don't have enough time, do not watch it at all. It's pointless not to watch the full length. So then you see here there's the price was going up before, so it was going up before, all right, was it? And then he pulled back from this little double bottom chart pattern, and then the price went up. Pay attention carefully, all right? This is advanced technical analysis, tips and tricks. And there are trading software out there that are using those patterns to make decisions in the financial market because those trading computers can recognize those patterns and match them in order to forecast or to predict the next price action. In fact, I told traders that the most powerful market forecast tool is the fractals. Fractals from Benoit Mandelbrot. Predictive fractal pattern, not fractal relating to candlestick pattern. No. Predictive fractal pattern. So the price form, you can see here, the price went down, and then from this little double bottom chart pattern, and then went up like this. Can you see it? All right. The same pattern is copying itself on the same time frame. Here it is. Can you see? Can you keep your eyes wide open? So here it is. The same pattern. All right. So you can see that the price went down a bit here. You see here, it went down. Yes or no? We have this what? A little double bottom chart pattern because the two lows are very close to each other. Can you see the similarity between these two lows and this one here? Can you see that? Can you see? All right? The similarity between these two double bottom chart pattern and this one here. With that information, we can have a bit of idea what is the Dow Jones is likely to do. Also, some trader may say to me, George, I love you so much. Now I'll do exactly as you are telling me to do. You are the god of the financial market. No. Calm down, my friend. Calm down. When we are talking about market prediction, all right, or market forecast, we are talking about, expectation. We are expecting a certain behavior. Now, we are not using some, magic power here. We are just observing. We observe a pattern. We have identified a pattern. The same pattern is being formed. Then we have a bit of an edge. We are expecting something because of what has happened before. Okay. This pattern has been formed before. After this double bottom chart pattern, now we see the same thing being formed here. Can you see it? So what we have seen before. Can you see the price was going up, and then the price did the pullback, and then from this little double bottom chart pattern, and then went up like this. What do we see here? The same thing. The price went up before, now it pulled back a bit, now it formed this little double bottom chart pattern. We will expect it to do something like this, which we now is going up to this point, all right? And then it will pull back a bit, which we are now expecting it to pull back a bit, and then we will expect it to go up a little bit above this high here, go up a little bit, and then to pull back like this, and then you continue to go up to this point. All right? And also, because this move up all the way here, this point here, is 161.8% Fibonacci extension level. In fact, I don't want traders that are not serious about trading to watch this video. If only YouTube can allow us to ban ordinary traders to watch this video, that would be great, because for me, I don't want to waste my time talking about something so important and then just leave it there for anybody. But no, this is to make you laugh. If you are a new trader, don't be discouraged. So I'm trying to say that maybe this is too advanced for you, all right? Maybe if you think it's too advanced for you, don't watch it at all. That's what I'm saying. I don't want traders to watch this video, part of it. That's what I'm just saying, all right? In fact, maybe I should only share it with traders on our website. So what here? So a pattern has been formed. So now, if one more thing I need to say to you, this move here, the price went down. You see here, it went down from here all the way here, and then went up here. This move down, okay, you see price went down from here to here. As it start going up, it went to which level? All right, the 161.8% Fibonacci extension level. Let me clear. If I go to the yearly chart, it's easier for me to do it on the yearly chart. My Fibonacci drawing, this is what I'm trying to do here to get the exact level. Price went down. That's it, from here to here. As it's going up, you see it went up to the 161.8% Fibonacci extension level. That's level here, 161.8% Fibonacci extension level. If you like, color it now into I'm running out of color now. Color into black. Hopefully we should be able to see it on the monthly chart. Then the price went up to 161.8% zone. Yes or no? After it pulled back here, it went up to 161.8% Fibonacci extension level. Now we see it. Going back to the monthly chart, because those things are so important, all right? So this is the 161.8% zone. It went to that zone, all right? After pulling back like this. So now with that information that we have here, it has happened before, that after this pullback, yeah, and it's a little double bottom chart pattern, price went up to 161.8% level, but in this move, 1, 2, 3, 4, 5, went up a bit, pull back a bit, went up a bit, pull back a bit, and then go up. So we are expecting the price now at this point in time has already completed this part of the pattern. Can you see that? This is what we call fractals. So if you go on YouTube, I always talk about this. So traders that have been following, I know exactly what I'm about to talk about. Predictive fractals is this is a different subject about candlestick predictive pattern. Am I talking to Google algorithm so that they don't align this video with the ordinary fractal, but classify this video as a predictive fractal pattern in a section of market forecast, market prediction? Because sometimes I notice that the video are appearing with the candlestick fractals. I don't like that, okay, because it's a different completely subject. So it is at the correct place. So those who are looking for market forecast, market prediction can see this video. Those who are looking for fractals with X at the end can see this video. I don't want it to go with, okay, the candlestick fractal. I don't want that, all right? It's not good. It's the wrong subject, different subject. So here we are. So we notice that after this pullback, price went up, okay, like this. So this session here is already completed. This session, this move up is already completed. So we are expecting the rest of the pattern: a pullback, a bit move up, a down, and then up. So this is an expectation. So allow me to go through this for traders that are watching our video for the first time, because if you have been following us before, you know that I've done this 100 times. I try to guide the traders a little bit. So if you have been following now, you can switch off for a while, because you know the procedure. The forecast is not a science, okay? The forecast is not guarantee. The forecast is an expectation. The market prediction, market forecast is not an exact science, because sometimes you see some powerful people, rich people, and contact, for instance, anyway, international people, and say market forecast. And people think that this is an exact science, and it will be exactly. People will just sell their house, their car, and everything, and put money on in the financial market, and the market will do something completely different. And then people say, "Oh, mambo jumbo," but no. In the financial market, we talk about expectation, and we are following the price. The price goes first, and then we go. All right, not before. So here we are talking about predictive fractal pattern. We are using a pattern that has been formed. We are expecting now that the price will behave in a certain way, but we do not impose our expectation on the market. When a price is doing exactly what we are expecting, we will take advantage of it. For instance, as we are here now, a smart investor may be a little bit patient, so we will wait for this move down, this move up, this move down. And now we implement a top-down trading method to catch the last move of the pattern, which will propel the Dow Jones into this zone. So this move, where we are now, we are here now, we are expecting 1, 2, 3, 4, move up. This move all the way up here that we are expecting to be formed will push the Dow Jones, talking about forecast, expectation, may push the Dow Jones up to the zone of 20075. Using again, my friend, the Fibonacci extension for the move from here down to this level here. So the 161.8% Fibonacci extension level of this move from here down to this level here is 20075. The Dow Jones has a high chance to go to 20075 using a market forecast. Again, one more time, my friend, because traders are watching, investors are watching videos like this, and they go and make decisions. Now, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. The point we are making here is that fractal patterns are patterns that are copying themselves and repeating themselves and duplicating themselves on various time frames, on the same time frame sometimes, from one financial instrument to another financial instrument. Those patterns can allow us to know, to have a bit of idea what the price is likely to do. There is a fractal pattern on this chart, on this monthly chart of the Dow Jones Index. We have noticed the same pattern. So price went now, pulled back from a little double bottom chart pattern. Here we have again price went now, pulled back from a little double bottom chart pattern. This section here is now completed, which is this section here. All right, we are expecting the price to go down a bit. So we are expecting in a few amount for Dow Jones to pull back a little bit, as it did here. We can go a little bit deeper. So that's what I'm saying to you. This video is not for babies, all right? It's for sophisticated investors. It's for advanced traders. It's for those who are interested in fractal pattern. Those who are interested in predictive fractals. Those who are analysts. So you can see we can go a little bit deeper. You can see that the price did. You see from here it went up to this level here and pulled back here. So we can measure how much retracement we have here. So it went up from here to here. How much retracement is that? It's 38.2%. This move down is 38.2% Fibonacci retracement level of the move from here. I might measure, because you have to measure it correctly. From here to here, that's almost 38.2% level. So we can expect again, if it's going to go down here, we will expect it to go down up to 38.2% Fibonacci retracement level of the move from here to here. But one more time, this is not an exact science. The price can go down from here up to 50% or 61.8% level. But because it has done it here at 38.2%, our expectation that probably it will change at 38.2% level. But it can go down to 50% or 61.8% or do something completely out of what we are expecting. So I need to speak like this because I want to attract traders that are mature. I want to attract traders that are not gamblers. I want to attract traders that are defensive. That's why I'm speaking like this. So those who do not like okay the way I'm putting it forward may just unsubscribe or go away from this video, this particular video. If you unsubscribe, okay, and then few days later you say, oh, what just said is true, you can come back again and subscribe again, okay. All right, because we need subscribers, okay. Now, but I'm serious here because I don't want traders to behave like a child and rush and make decisions that will cost them money. I do care about that. I don't want traders to go and make decisions that will cost them money. I don't want that, okay? So this is about the fractal pattern. But going back to the yearly chart, which key levels the professional are watching now? Which key level is bordering Dow Jones traders? The Dow Jones traders are watching the high of 2015. That high is at 18351. You want to note it down. If you trade Dow Jones, okay, you can temporarily tattoo that onto your left hand. That is to make you laugh. Don't do that, okay? Which means you need to write it somewhere so you do not forget. All right, 18351. All right, so this is the key level that the professional watching. That is the high of 2015. Another key level that the professional Dow Jones traders are watching is the opening price of 2015. That level is at 17823. 17823. So do not forget 18351 and a level of 17823 if you are trading Dow Jones. All right. So if I change my time frame now and I go to the weekly chart and we see 18351, I'm going to adjust this one and change it to 18351 on my chart. It is the line that is in turquoise. Okay. Can you see it? Bear with me, traders. That's the level here. That's the turquoise line here, 18353. You can see that recently the price went above that high, the high of 2015, but now it break below it and retested it here. That's why this month, which month are we in now? We are in October 2016, yes or no? So it went above it, fell to find a support, break below that level of 18351, now is retesting it, and people are selling it. But it's a tricky place to sell because there's another support here at 18017. You see, that's why I don't remove my line on my chart, you see here. So they are selling, but there's another support here at 18017. So remember the high of last year, and decisions are made around that key level. So here, first time it breaks above it, retesting for the support, people start buying. Couldn't go up more, pull back, find a bit of support, break below it, now you're retesting it. Decisions are made around key levels. Professionals always trading around key levels. But when we are talking about key levels, do not only stack on horizontal key level. There are key levels that are trend lines. So they are making decisions, break above, retest, break below, retest, around key levels. All right. So the yearly tag key levels are superior to the monthly chart key levels, and so on and so on. And especially the high of last year, you see here, at 18353. So if it goes above the high and find a support, that's a bullish zone, yes or no? Now that it D below that high and find a resistance, they will sell it down up to which level? Up to which level? Up to the median line of last year. So you want to go to the yearly chart. This is how the professional trade, this is how the hedge funds are trading. This is how the big financial institutions are trading. They don't just buy at any price, they buy at a specific price for different reasons. And the market is moving from one key level to another key levels all the time, on any time frame. So you want to know where are those key levels, so you also can make decisions around those key levels. So I would say that roughly, that median line, just using my eyes, I will position it in a zone, all right? In a zone of 166 1679, 16679, roughly in that zone. Just looking at the range of this candle, the median line should be somewhere here, corresponding to 16679 in that zone. Not exact level, but in that zone. All right. You can use Fibonacci retracement and then pay attention to the 50% Fibonacci retracement level of the range of this candlestick bar, and that will be the exact median line for last year. So talking about key levels, we are talking about the high, the low, and the median line of last year. But because this candlestick bar here is a little bit bearish, we need to pay attention to the opening price. Okay, the opening price at 17823. So the price went above the high of last year. Now it comes up below it and is retesting it on the monthly chart. Professional trader understand the language of the price, break above, below, break below, retest, turn around. It's going on all the time. On the monthly chart, it's not very clear. If you go on the weekly chart, you will see it clearly. That's why we change time frame. When we are changing time frame, we want to see clearly. Okay, that's what we are doing. Okay, so on a weekly chart, it becomes clear that it breaks below it and now it's retesting it. All right, we will see by the end of October how this will play. So there are two things that are playing in our mind. We see that a fractal pattern, now you see here on our chart, how the pattern is very clear. It went up from a double bottom pattern. See now, it went up, pulled back. It's ahead on a weekly chart a bit. So we have noticed a fractal pattern, all right, on the monthly chart. That fractal pattern is copying itself on the same time frame, projecting itself into the future. This is what the projection into the future, all right, of a pattern. The same pattern has been formed before on the same time frame. Now it's forming again. It's the projection of the fractal pattern onto the future. All right. On the weekly chart, it becomes a little bit clearer because you can see here it went up, it pulled back. It looks like it's a little bit ahead. All right. Okay, but in our view, our expectation is that the Dow Jones, you see now, it's on the edge of this key level. Which one? The trend line, the red trend line here. See, it's clear there on the weekly chart. So it pulled back now. It's retesting here. For TSTWSY is your trader. For top-down trading method traders, we will use a top-down trading method, all right, and we will be giving priority to bullish signal, okay, all right, above the high of last year only. But if you did not know that the high of last year is at 18351, you can get into trouble because what the price has done, it break below it and now it's retesting it. So some sellers are here. They are selling, but they are in a tricky place. It's going down. So if you want truly to sell it, you want it to break below that bullish trend line, the red line. If you want truly to sell it, we will prefer a scenario like this when it breaks below. So this is what the price is doing all the time. Break below, retest, turn around. This is how you sell. Break below, retest, turn around. Can be either a trend line or horizontal key level. Can break below the level of 17017 and retest and turn around, or below the red trend line. That's what you're doing all the time. If you want to buy, break a bow, retest, turn around, and then you implement a top-down trading method. Nothing magic about it. All right. So, but our expectation is that the Dow Jones, one way or another, will slowly but surely. This is our expectation that it has a high chance to go to the level of 20075. If it reaches that level, looking at the pattern on the monthly chart, it will come back down. So it goes to 20075. Final resistance there. Now we come back down all the way, okay, to the beginning, in the beginning up to the zone of 15469. Call it 15470. Is that correct? What's happening here? Hold on, let me get it right. Up to the zone of 15450. 15450. So we were expecting it to go up fast to 20075 and then to come back down to this level 15450 zone. In that zone, okay, the low of this candlestick here, up to go up and then we expect it to come back down. Okay, this is about, okay, Dow Jones Index, advanced technical analysis, tips and tricks. The takeaway here is that there is a pattern that's been formed on the monthly chart. That pattern is duplicating itself again on the monthly chart. This will be giving us a bit of idea. This is allowing us to have a bit of idea what is the Dow Jones is likely to do. Our expectation that the Dow Jones may continue to go up to 20075, and after that we'll pull back to the zone of 15450. All right, that remains to be seen. This is not an exact science. This is an expectation. But if the price is doing exactly what we are expecting, we will take advantage of it. The pattern is very clear here. Price went up, pull back, and then goes up to 161.8% Fibonacci extension level before coming down. So if it reaches this level as we are expecting, if our expectation is fulfilled, reach 20075, we will now give priority to bearish signal below 20075, expecting the Dow Jones slowly but gradually to come back down to the starting point, and in that case, will bring us to 15450 zone. Now remember that there are trading software out there, algorithms out there that can pinpoint those patterns easily and play them in real time when the market is open. There are two key levels that one should not forget. The high of last year is at 18351, and the low of last year, let me go back, and the low of last year at 15370. All right, the low of that's not the low, and the opening price of last year, opening price. So the high of last year, that's the first key level that you do not want to forget. Correction, the high of last year is the first key level, 18351, and the opening price, not the low, the opening price of last year at 17823. Going back to the monthly chart, my friend, what's happening? All right, we see that the Dow Jones is still in a rising channel. It's still in a rising channel. It's at least above, a bullish trend line. All right. So the market sentiment, this is telling us that the market sentiment is bullish. Dow Jones is in a rising channel. The market sentiment is bullish, but we will see how we play it up to 20075. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about Dow Jones Advanced Technical Analysis tips and tricks. If you want to learn more about fractals or predictive fractal, subscribe to Day Pro Traders YouTube channel, or visit www.dayprotraders.com. Happy trading to you all, and speak to you soon.